Yo, welcome back to Smart Trading with Jang. I welcome you guys back. So let's start and dive to today's analysis on silver. Silver and other commodities. Gold is the first, which I like. Silver is the second one. So in today's analysis, I will start from the yearly chart, the 12 month, and I'll drop till the 1 month chart. Okay, on TradingView. Yeah. So let's start. So on the even on the early, we can see that the structure is bullish. So you can see this is the 1 year breaker structure. Cool. And we went down to discount. Yeah. So the price is below here. It mitigated here to the order block. It went down, and here there is a breaker structure inside the candle. If you can see, I can see even on this time frame there is a breaker structure. I'll drop down to the time frame to make you see better. But if you gain experience, you will see on the same time frame a breakout structure in the lower time frame, which is great. So yeah, here there is a breakout structure. There is a retest in the discount. So what is that? What are the targets? Basically, the buy side liquidity, the first one, and here the swing. So this swing, the money is lying, and probably, yeah, silver is going to visit all time to make a all-time high and broke this one. So it's a better chance to buy silver, even physical, bro. I know some guys who bought silver in a physical state basically, and they believe, I don't know, they are not trader, they are not traders in the markets, but they believe actually that the silver price is going to skyrocket in the next in the next months, few months. So let's see. It's incredible how they prediction my analysis. I mean, the smart money analysis. They both coincide. Are in coincidence. But let's move on. So let's go. Oh, So let me remove this one. Okay, so we know that the liquidity is here. Let's move down to the 6 month chart. Cool. So okay, top down here, the same breakout structure which I drawn earlier. We are in discount, sweep this low, took money, and tarata. So this is the breaker. You can find even on the lower time frame this one. Price went up, down, and up. Okay, so the targets are still the same, and yeah, just to make you aware of what's going on silver. Fair value gap filled. This is balanced. Price do not come down and up. Let's move to the 3 month. Same concepts. Down, the breaker was this one. So as you down the time frame, you can find the breaker, which is very incredible. Look at that. Down, up, the 3 month candle down the breaker and up basically. So the most sensitive region in the breaker is the 0.5 level, which is the mean threshold, which I like. And so this is the way. Let's finally draw to the 1 month time frame, and here I will make a nice analysis from from where you guys want the analysis from. Here, let's do from the top of 2011 April. So okay, so here was a break of structure. Here you can see this is a balanced price range, because this price action is going before the breakout structure, and this is filling the gaps, so there is no gaps here down. And okay, so the price will not come back up if the order flow is still negative, bearish, and the order flow is still bearish, so the price will never come back here. Okay, let me zoom. So the price came down here, and the array to watch is from here to here. Look at that, the price never come back up here. And there's another concept of the fair value gap BRP, which I like. Basically there's a fair value gap on the both sides, and this is also a balancing price section. The price action took the liquidity from here and rolled down to take this liquidity down here to this one. So the same concept, this is already Brent's price range, down this to here, the fair value gap plus the breaker, this one. Down to the breaker, and then again to take the sell side liquidity. Okay, so sell side is taken. So here, from here, the up to the break to unmitigate order block, I mean here, yeah, and then down to take the liquidity. So here we had a break of structure, the break of structure which is bullish. Okay, so the target is my first target will be here, the buy sell liquidity. So took. So here, if you go to the high time frame, or even if you want to, because yes, the order flow is bullish, but first of all, this is not an order block, because an order block, there is a, I mean, there is a rule. Basically, you want to see a displacement of fair value gap after an order block, like this one. Order block, there is a fair value gap, so this is a valid order block. And look at that, the price, so the price went here, and this from the concept is called order block validation. So this order block got validated, and here we are. So I was here. So this is basically internal liquidity, and down to the external liquidity. So another thing I want to mention here, there is another concept. Okay, so basically internal liquidity to the external. I want this low to be taken. So this low here in this price range, let me is not taking the low. So here you can be deceived by the price action. I mean, you can get confused why is not getting down, because logically it has to get down, and it will get down. So why? This concept is called engineering of liquidity. I'll make you know that. Engineering of liquidity. This is called engineering of liquidity. And basically in this engineering of liquidity, the price don't hit, but you know that it will hit surely and logically to make the external liquidity taking. So the price move here little bit to take some buy side above here and above here, to move directly into the sell side to take this liquidity, and then move back up very fast by not getting the chance to the retailer to get here. I mean, the retailer will get will long here in this price action, or in this when the moves already is fading. I mean, they will be net loss. I mean 40%, man. So this is the logic, this is the price action by the smart money. If you know what you're looking for, man, you can make a bunch of dollar, a lot of stacks. So liquidity staking, so liquidity took, we had the break of structure here, but you want to enter at a discount. So this is the array to watch, this one and this one. Okay, so look at that, we went this is the 0.5, we went down to discount. Okay, so so at the discount, okay, you have to enter a discount, you know, but where, which array? Basically this fair value gap, is not in discount, so it will fill up. I mean, some part is here in discount, but it will fill up because once a fair value gap get get touched, also depending upon the structure. I'm not saying always, but also the structure. If you know how to read the structure, like top break of structure is here, internal liquidity, it will take these lows, so down again, internal liquidity, then down, then here we have the real break of structure to the discount. So by knowing where, you know that this is the order block, okay, this is the order, and this is balanced price range, and another thing, this is the breaker. I always recommend you guys to buy the breaker. Basically here up to the discount, which is also aligned with the discount level, the breaker one, so which is very nice. So now, as you know where to buy, we buy here, and we'll let the price run to make a break of structure. I will let here, and I'll buy here at discount, where, as I said earlier, at the breaker level, which is here. Here they sold to make this low, and here the price went up, so went down. So here the smart money will mitigate the orders to mitigate or to enter, re-enter. Okay, so this is the concept. Plus we are in discount, look at that, 0.5 down discount with a wick, which is very nice. I like this price action. So up, down. So what are the buy side liquidity? Here we took that buy side liquidity here, and the final, which I told you guys, let me delete this one, this array. Okay, so this took, so now which are the liquidity left? So we have this liquidity to be taken, this liquidity, this liquidity. Okay, this is called relative equal highs, transient liquidity. This is money. And okay, so this was, as you remember, this was the monthly, the yearly, sorry, I'll make this one, I will change the color. So this was the early liquidity, So one another thing, and then I'll wrap this video up. The price action will run toward the high time frame liquidity. So if the high time frame liquidity is, and the order flow was built target the high time frame liquidity for sure. Then another thing I want to add, that on the average here, the structure can be like this. You don't know. The like this structure forms, because you can make a lot of money instead of price. Okay? This is possible because the ranges are wide. Okay guys, so this was silver, and I hope you guys are buying silver. This is not a financial advice, but yeah, for